It is the number we've all been waiting for. Walmart out with its quarterly results. Let's get right over to Courtney Reagan. She's got the highlights. Courtney, good morning.
Hi, good morning, Becky. Yeah, that's right. So for the second quarter, Walmart is reporting adjusted earnings of $1.77. That's 15 cents stronger than consensus on revenues of $152.9 billion. That's about $2 billion above estimates. The company does note that strong global sales are driven partially by inflation. Now, of course, these full results are coming about 3 weeks after the company issued a profit warning for this quarter ended July 29th. Guidance that looks like slightly improved here with now a projected adjusted earnings decline of 9 to 11% for the year. 3 months ago, that was forecast to fall about 10 to 12%. U.S. comp sales grew 6.5%, driven again by grocery. Transactions up 1%. Average ticket, though, up 5.5%. Sam's Club, that actually saw even stronger comp sales growth. U.S. net e-commerce sales looks like a re-acceleration here, growing 12% year over year after 2 quarters of just 1% year over year growth. And Walmart's newer global advertising business grew 30%. Overall, Becky, the operating income fell almost 7%. And I spoke briefly with Walmart's new CFO, John David Rainey, and he said, look, the retailer is seeing the quarter itself ending stronger than what we guided to at the end of last month. Also seeing more medium and high income consumers coming into Walmart, with 3/4 of share gains in food from customers with annual household incomes of $100,000 or more. For consumers with less disposable income, Rainey said there is evidence of trade down in both in terms of quality and quantity. For example, instead of customers buying deli meats or beef, they're buying things like canned tuna and chicken. He also added that units of beans are up more than 25% in the quarter. And instead of buying pack sizes of items from 10 or 12, it's looking more like 5 or 6 in many cases. Inventory is up 26% year over year, though a 750 basis point improvement from the prior quarter. And Rainey said that about 40% of the $11 billion in higher U.S. inventory is really a reflection of the higher cost of goods from inflation. Only about $1.5 billion is the amount Rainey would like to, quote, wave a magic wand to make disappear. And at 10 a.m. Eastern time, I will sit down exclusively with Walmart CEO Doug McMillon right here in the retailer's hometown of Bentonville, Arkansas, for a more complete look at what happened here in the second quarter that did appear to improve towards the end of the quarter. Back over to you, Becky and Brian.
I just want to call up the stock chart again because Walmart shares are up on this news. You've got Walmart shares right now up by about 3.9%. This comes just weeks after the profit warning that they issued, just talking about what they were seeing in the stores. Was the street's reaction too harsh at that point, too much of a takedown for them just saying, hey, consumers are trading down and getting pinched by inflation? Or, I think I'm just trying to figure it out because did the street react too harshly? Did things improve? Because this was the quarter that closed at the end of the month.
Yeah, a little bit of both. I think when Walmart had issued this warning, things were looking more dire than it ended. When I spoke with the CFO, he sort of said, look, there was May and June and call that sort of one section of the quarter. And then there was July, and things really did change. They started to improve. We saw some back-to-school spending pick up when it comes to at least the school supplies, not necessarily the apparel. The company thinks it's a little too early to see that. So things did start to improve when it came to the sales mix and maybe some of those higher margin goods. I asked specifically, when you see gas prices fall, does that really impact the consumer psyche? Meaning, when we saw gas prices fall more broadly across the country, was that when things started to improve? They sort of said, look, we don't have an exact analysis on that, but it stands to reason that that was part of the reason for that turn. So, again, how much could analysts anticipate that any more than anyone else? I'm not sure.